Hello, friends. I feel happy in welcoming you for this workshop on building effective cash flow models in Microsoft Excel and VBA for Excel. This workshop is completely case based, excepting for the conceptual part, and is of hands on that will strengthen the conceptual knowledge of the participants and equip them with advanced MS Excel techniques and basic VBA programming skills and techniques required to develop, operate, and maintain cash flow models and thereby enhance the value addition both from strategical and tactical perspectives. If you are a professional, your role as a business partner will certainly be strengthened. The workshop is divided into 9 modules for the purpose of discussion, understanding, and illustration. Effective cash flow management helps a business to reduce its cost of capital and achieve its objectives on a timely basis. This requires an entity to forecast and model its cash flows effectively. Thus, the objective of this workshop is to equip the participants with the skills and knowledge of the level that will be required to prepare, operate, and maintain customized cash flow forecasts and models for their business entity. As mentioned earlier, this workshop consists of 9 modules. The first one is on introduction and reading of the case study that will be taken up for the entire session. The second one is on creation of spreadsheet templates and building VBA controls. The third module is on identification of external macro factors and mapping the organizational macro factors with the external factors. The fourth module is on forecasting working capital determinants. The fifth one is on forecasting elements of income and expenses. Module 6 is on preparation of investment cash flows forecast models. Module 7 deals with the preparation of financial cash flows forecast models. And Module 8 is on preparation of operating cash flows forecast models. In Module 9, we are going to discuss about the consolidation of the component cash flow models and validation of the cash flow forecast models. The first module, which is on introduction, focuses on aspects of the significance of cash, impact of non-availability of cash, as well as challenges which arise out of surplus cash. Then we will proceed to discussing the case study that will be taken up for the illustration purpose throughout the workshop. Based on the reading of the case, then we will identify the input parameters, input data, assumptions, input sheets which need to be opened, the constraints that will be considered in the course of preparation of the models, what are all the limiting factors, what are all the output sheets you will be needing, the alerts and controls which will be building in the course of the preparation of the financial models. Module 2 forms the most important part of this workshop. Here we design MS Excel templates in order to create the spreadsheet infrastructure and add VBA functionality. However, we will keep on refining and modifying the templates until we are complete in all respects with respect to the creation and the refinement of the output models. These are all just an indication of the templates we'll be creating. We'll be creating a template for impact analysis of economic, industry, and the competition factors, a worksheet for organizational macro factors, a worksheet for assumptions which will be making in order to uh, project our performance. We'll have a sheet in relation to the forecasting of demand, capacity planning, what are all the targets and outcomes you are going to achieve over a period of time. Then the controls, both in terms of functional controls and technological controls, will be setting in the kind of input data we'll be providing also need to be properly templated. Then we of course need the relevant portion of the financial statements at the beginning of the period. Then there will be a worksheet for the determinants that form the working capital or resources of an entity. Then in relation to the income as well as expenses of the income statement, we will have templates. In addition, we'll also be having templates in relation to investment cash flows forecast, financial cash flows forecast, then operating cash flows forecast, and the comprehensive entity cash flows forecast. Besides, we will be also having templates in relation to providing alerts as well as the outcomes of the expected performance. We'll also have an action list depending upon the reviews versus the perceived outcomes. All along the course of creation of these templates, we'll be also building in VBA functionality. This is just a, a sample of creation of VBA functionality into the uh, Excel templates. If you look at the bottom portion, you can see some uh, little English kind of words like static, sub, UDE, echo, para, click, equal to, workbooks, blah blah blah. So they are basically the kinds of code we'll be writing in order to add the VBA functionality into the Excel template. You can also see the controls we have put uh, in this worksheet. You can see the on the leftmost column of the worksheet, you can see the heading validation of inputs and parameters, and then below that whether GDP growth rate has been entered, then whether GDP growth values are above or below standard deviation, one standard deviation. They are basically to have a kind of check uh, upon the with reference to the upper and lower limits of a particular parameter. This is a sample of assumptions sheet, uh, what is the cash sales ratio, how much of the sales is going to be on credit basis, what is the ratio of expenses, how much the in terms of cash, and in terms of the borrowings, how much increase we are going to make, what is going to be the cost of borrowings, and all the similar assumptions which are going to make in relation to our projected cash flows. They need to be captured and appropriately templated as well. This one is on a kind of control or checks. You can say whether the balance sheet is tallying, whether the closing cash and cash equivalents as per the balance sheet or in agreement with the cash flow statements, because these kinds of checks are highly essential in order to have an error free cash flow forecast model. A business is a subset of an industry, economy, and external environment, and hence the macro factors from those perspectives have to be studied, and the organizational macro aspects need to be mapped with them before any strategic plan is devised for the business entity. It becomes essential to review the macro indicators even on a regular basis. The macro indicators can be generally classified into economy indicators, industry indicators, competitive factors, then government policies, and geopolitical matters. In addition, we also need to identify them on the basis of controllability as well as the non controllability of the factors, besides mapping the organizational macro factors, external macro factors. As far as the economic indicators are concerned, we'll have to, um, of course, uh, capture the expected economic growth in the light of the current economic growth and the future economic environment, the inflation, which is an important factor in relation to the cost of input resources and the selling price realization. Information on balance of payment is very vital if our input resources or our target market is spread out across the globe, because the balance of payment of a nation has an impact on the foreign exchange currency rate. Of course, the interest rate has an important impact on the financing cost of a business, so that has to be properly studied, and its impact, expected impact, need to be gauged in our cash flow model. As far as the industry is concerned, the business entity is a subset of the industry of which it is a part. So, whatever factors which need to apply, which are applicable to the industry, need to be considered from the perspective of the business itself. They are basically in relation to the market segmentation, the opportunities that are available, the challenges like such as in the form of substitutes which an industry is facing, and what is the expected growth of the industry in relation to the economy. All these factors need to be considered as well. As far as the competition is concerned, we need to consider the total market size, what's our market share, who are all going to be the new entrants, what are the game plans of our competitors, and what are the other challenges which will be foreseeing in the light of the competition. All these factors need to be captured, and of course we'll have to have specific templates in order to assess their impact on our operations. As far as the government policies and geopolitical matters are concerned, government has an important say on the profitability of a business, and it has a very good impact that the policies of the government has have an impact on the investment policies of the business. So factors which relate to investments which relate to export, the taxation policies of the government are all highly vital for a successful operation of a business. So we need to capture the importance of these factors as well. As far as the geopolitical matters is concerned, factors like oil prices, global political balance, and uh, their impact also need to be analyzed. So it's very essential that we appropriately consider and make an impact analysis of these factors from a proper perspective. Module 4 talks about the working capital determinants. If the working capital cycle is longer, an entity needs to lock up its liquid resources for a longer time, leading to higher cost of capital or a stress on the organizational morale. Effective cash flow management requires the management of working capital effectively as well. Here we need to consider factors such as the industry average working capital cycle, which need to be compared with the organizational working capital life cycle. We need to review our own manufacturing cycle. We have to make decisions in relation to inventory levels, as well as a review of credit policies and purchasing policies occupy an important role in relation to our working capital cycle. Of course, the liquidity policy also has an important uh, determining role in relation to maintaining appropriate resources to meet contingencies. Besides, we also have to factor in the working capital structure. That is, how are we going to meet the deficit in the working capital in the form of long term loans or short term loans. So these factors need to be considered while we are going to determine the working capital structure and the resources which you'll have to make available for an effective functioning of the organization. Income statement is a very essential and integral part of the cash flow management system of a business, and forecasting of elements of individual revenue and expenses are highly critical in the context of preparation of an accurate cash flow forecasting of a business entity. This equally applies both for revenue as well as expenses. While revenue forecasting again has to be appropriately studied in the context of demand forecasting and price forecasting, as well as identification of costs or expenses and the behavioral aspects of the costs and expenses in relation to production or revenue or other parameters has to be studied and captured appropriately. Preparation of financial cash flow models involves study of the existing capital structure and proposed capital structure, information on capital that is being obtained, whether it is of loan or equity, how much of the capital is being redeemed or repaid, what is the interest cost that has been incurred and paid, what are the dividends that have been paid, and also we need to make arithmetic reconciliation with the non-current liabilities in the books of accounts. So considering all this information, we get to know what is the net financing cash flows of the entity for a particular period. Preparation of operating cash flows model involves linking the worksheet with the historical performance, the economic indicators, the market research, also linking the operating cash flow model template worksheet with the investment policies and financing policies of the organization, the pricing strategies, behavioral analysis of costs. It could involve even application of statistical techniques such as regression and trend analysis. We also need to reasonably determine the financing cost that will be incurred by the business entity, besides calculating the tax liability on the profit. Besides, we also have to make a scenario analysis in relation to the key uh, profit or loss elements of the business. Once the component models have been prepared, then we'll move on to consolidation of the cash flow models. Having prepared the component cash flow models, we need to consolidate them and get the consolidated entity cash flow models, which are also requires preparation and confirmation with the balance sheet model in relation to the closing cash and cash equivalents. We'd also need to remember that the opening balance sheet has to be reconciled with the cash flow models in relation to the opening cash and cash equivalents. Having prepared the consolidated cash flow models, we need to review the cash flow models and also need to assess the surplus or deficit of cash, for which we'll have to draw an appropriate action plan in order to bridge the deficit in relation to the cash that will be needed, and also in order to effectively deploy the surplus cash that the organization might be having. If necessary, we will have to remodel the forecast, and we also need to validate the cash flow models with the strategies and goals of the organization.